Hey everyone, welcome back for another deep dive. Today we're going to be taking a look at the U.S. economy. Specifically, we're going to be looking at the economic outlook for 2025. And we're using a recent report from Ernst& Young, or EY, as they're better known. And this report is particularly interesting because it comes just a few weeks after, well, that roller coaster of a presidential election we had. So there's a lot of unknowns, a lot of uncertainty. But even with all of that, EY is still projecting that the U.S. economy will continue to lead the pack in terms of global growth, even with a slight slowdown that they're predicting for 2025 and 2026.
That's right.
Now, to help us make sense of all this and really unpack the complexities of economic forecasting, we have an expert joining us today.
Great to be here. It is a fascinating situation. We've got this underlying positive trend, but there's this huge question mark hanging over everything. How will the new administration's policies actually shake things up?
Yeah, that uncertainty, that's the big elephant in the room. So before we even get to those policy changes, I want to ask, what's giving EY the confidence to say that growth will continue, despite all this political drama that's going on?
Well, they're basing this on a few key factors.
Right.
First of all, the U.S. job market is still pretty strong. We're seeing pretty solid wage growth hovering around 4%, and companies are still actively hiring people, though it is worth noting that EY does anticipate that the unemployment rate will creep up just slightly to 4.4% in 2025.
Okay, so a slight wobble, but not a full-blown crash.
Right.
That makes sense.
Exactly.
What else are they looking at? What else is propping up the economy?
Well, another big factor is that American consumers are still spending money. And this is really being driven by that income growth we just mentioned. But EY is predicting that even this spending will start to cool down a bit, especially as families kind of grapple with higher debt and less savings.
That's like that old saying, keeping up with the Joneses. But it's more like keeping up with inflation these days. Even if your paycheck is bigger, it doesn't feel like much. If everything costs more, too.
Exactly. You're just running in place. And this brings us to the third really crucial factor: productivity gains. This is a big one because it directly impacts inflation. Essentially, what we're seeing is businesses are becoming more efficient. They're producing more output with the same or even fewer resources.
I think a lot of people hear productivity gains, and their eyes just glaze over.
Yeah, it sounds a bit technical.
Can you make this real for our listeners? Can
Yeah.
you give us an example of what this actually looks like? To a specific industry or something.
Yeah, absolutely. So let's think about the tech sector for a minute, specifically software development.
Okay, yeah.
So in the past, you might have needed a large team of programmers to build some kind of complex application. But now, with advancements in cloud computing, automation tools, a smaller, more agile team can achieve the same or even better results. That's a productivity gain in action.
Interesting. Okay, so that translates into cost savings for the company, which
Yeah.
hopefully keeps prices down for the consumer, right?
Precisely. And this kind of efficiency boost is happening across a lot of different sectors. But EY emphasizes that even with these gains, inflation is going to be a tricky one to tame in 2025.
Yeah, the report uses this phrase, sticky inflation.
Yeah.
What exactly does that mean for our listener, like in practical terms?
It means that while inflation is projected to ease somewhat, it's not going to be a smooth ride down. In fact, EY even suggests that it could tick back up in 2026.
Wait, seriously, I thought we were supposed to be turning a corner on this. What's behind this potential resurgence?
Well, there are a few key factors at play here. One is potential deregulation. While this can stimulate business activity, it can also lead to some unintended consequences that push prices up. So think about environmental regulations, for example.
Okay.
Loosening those could lead to increased pollution, resource depletion, eventually driving up costs.
So it's a trade-off,
Yeah.
a balancing act. What else is EY highlighting?
Immigration is another big one. Potential restrictions on immigration could really tighten the labor market, giving workers more bargaining power to demand higher wages.
Okay.
And then those wage increases, they often get passed on to consumers in the form of higher prices.
So it all comes back to inflation again.
It does.
What about tariffs? Those taxes on imported goods. We've heard a lot about those in recent years.
Yeah.
How do they figure into the forecast?
Well, EY is actually pretty critical of tariffs. They see them as a drag on economic growth and a driver of higher prices for consumers in the long run. Essentially, they argue that tariffs might create a short-term gain for certain industries, but ultimately they harm the economy as a whole.
It sounds like we're facing a much more complex inflation picture than we've seen in the past.
Definitely.
And of course, all of this is happening as the Federal Reserve, or the Fed as most people call it, is trying to manage interest rates.
Right, the Fed has a tough job right now. They're trying to find that sweet spot, where they can support growth without letting inflation just run wild. It's like walking a tightrope.
It's a tightrope, isn't it? Trying to balance growth and inflation. And then on top of that, you've got all these potential policy changes from the new administration. That's where things get really interesting, right?
Absolutely. And EY's report doesn't, delve into specific policy predictions, but it does highlight a few key areas where the new administration's decisions could really have a big impact on the economic outlook. So, for example, taxes were a really hot topic during the election.
Yeah, lots to talk about potential tax cuts for individuals and corporations.
Yes. And EY acknowledges this, suggesting that the administration will probably push for some form of tax relief in 2025.
Okay, so putting more money in people's pockets, stimulating spending, boosting the economy. Sounds good in theory, but I'm guessing there's a but here.
Well, there always is, isn't there? Tax cuts can lead to higher budget deficits, which could cause problems down the line. And the real impact of any tax cuts really depends on how they're structured, Who benefits most? How are they funded? These are all really crucial questions that economists will be watching closely.
Right, because a tax cut for the wealthy might have a very different effect on the economy than the tax cut for middle-class families. It's all about how that money gets spent or invested.
Yeah, exactly. Another area where the new administration's approach could have a big impact is regulations. They've signaled a more kind of pro-business stance, which could mean less regulation in certain industries.
And that could lead to, I guess, increased investment, economic activity. But didn't we talk earlier about some of the potential downsides of deregulation?
We did, with environmental protections, for example.
Right.
It's a classic dilemma, isn't it? Trying to find that balance between promoting economic growth and protecting other important values. Too much regulation can stifle innovation, make it harder for businesses to operate, but too little can lead to exploitation, environmental damage, all sorts of unintended consequences.
Like that old saying, everything in moderation.
Right.
So what about immigration? That was another big one during the campaign.
It was, yeah. And EY suggests that any restrictions on immigration could have significant economic consequences. Specifically, they highlight the impact on inflation.
Because if there are fewer workers available, wages go up, and businesses pass those costs on to consumers in the form of higher prices. We talked about that a little earlier.
Yeah, it's that same cycle again. And it's not just about the number of workers. Immigration also brings in entrepreneurs, innovators, skilled professionals who contribute to the economy in all sorts of ways.
So it's a complex issue with really far-reaching implications. And then there's trade policy, another area where the new administration has signaled a pretty big departure from the past.
Yes, they've taken a much more protectionist stance, emphasizing the need to protect American jobs and industries from foreign competition. And this has created some uncertainty, of course, in global markets as businesses try to figure out what the impact will be of potential tariffs or trade wars.
And if I remember correctly, EY is not a fan of this protectionist approach.
That's right.
They argue that tariffs ultimately lead to higher prices. For consumers, reduced competition, and slower economic growth.
Yeah, they see it as a really short-sighted strategy that might provide some, temporary benefits, but ultimately harms the economy in the long run.
Okay, so we've got these four big policy areas: taxes, regulation, immigration, and trade, where the new administration's actions could really make a big difference for better or worse. They're holding the cards, and we're all watching to see how they play them. But there's one more layer to this whole economic puzzle that we haven't even touched on yet.
You're talking about the global context. The U.S. economy doesn't exist in isolation. What happens in other major economies around the world is bound to have an impact here.
All right, we can't ignore the rest of the world. So let's shift our focus a bit and talk about those global forces that could shape the U.S. economic landscape in 2025 and beyond.
Yeah.
Okay, so we're zooming out now. We're looking at the big picture, the global economic landscape, what's happening out there in the world that could impact the U.S. in 2025.
Well, for starters, we got to consider the health of other major economies. Like take Europe, for instance.
Right.
They're dealing with some sluggish growth, high energy prices, and, their own dose of political uncertainty. So if Europe stumbles, it could send ripples across the globe, including right back here to the U.S.
That makes sense. I mean, even if things are good here in America, consumers are feeling good, businesses are doing well, if our major trading partners are struggling, that's going to have an impact on demand.
Yeah.
For U.S. goods and services.
Exactly. And then there's China. The EY report anticipates that China's growth will moderate in the coming years. And this is partly due to some structural changes, things like an aging population, and a shift away from an export-focused economy. But there are also some worries about growing debt levels and those increasing geopolitical tensions.
Yeah, it feels like a lot of these global factors are kind of
Yeah. Well,
intertwined.
absolutely. And as if things weren't complicated enough already. We also have the ongoing war in Ukraine, which
Yeah.
has just thrown another wrench into the global economic machinery.
Right.
I mean, the war has disrupted energy markets, fueled inflation, and raised some serious concerns about global stability.
Yeah, it really highlights how interconnected the world is, doesn't it?
Yeah.
Events happening thousands of miles away can have a very real impact on our lives here.
So with all of these challenges
Yeah.
and uncertainties, are there any bright spots on the horizon, any potential opportunities for the U.S. to kind of leverage its strengths on this global stage? Well, despite all the headwinds, the U.S. still has a lot going for it. We've got a large and diverse economy, a highly skilled workforce, and a long history of innovation. And in certain sectors, like technology and renewable energy, the U.S. is a true global leader.
So maybe there's a chance for the U.S. not only to kind of weather the storm, but to actually come out stronger on the other side,
Yeah.
by focusing on these areas of expertise, building new partnerships with other countries, that kind of thing.
It's certainly possible, yeah. It really all boils down to making smart policy choices, fostering that culture of innovation, and really adapting to this ever-evolving global landscape. And a big part of that is staying informed, understanding the forces that are shaping our economic future.
Absolutely. Knowledge is power,
Mm.
especially when navigating these complex economic waters.
Couldn't agree more.
The more you understand, the better prepared you'll be.
Well, we've covered a lot of ground in this deep dive, from the U.S. economic outlook to global trends and potential policy changes. And, it can feel a little overwhelming at times, right? It can be a lot to take in.
But here's the key takeaway for our listener. The future is inherently uncertain. No one has a crystal ball. But by understanding the forces that drive economic growth, the potential risks and opportunities, and this intricate dance between global economies, you're better equipped to make informed decisions for yourself and for your business.
Well said.
And on that note, we're going to wrap up this deep dive. But the conversation doesn't end here. We encourage you to keep exploring these issues, stay curious, and don't be afraid to challenge your assumptions. Because in the world of economics, the only constant is change.
That's for sure.
Thanks for joining us on the deep dive. Stay informed, stay engaged, and keep asking those great questions.